Okay, good day, all stock market traders and investors. This is Total Investor, and on this YouTube investment channel, what we do is that we look for trading opportunities in both commodities and stocks, and that means we use technical analysis to make our trading decisions. Okay, today we're going to do something a little different, and that means we will be looking at charts for commodities. And in fact, there will be 6 of them. Okay, so it'll be pretty much straightforward charts. I just want to bring to your attention because I think that there's some possibility, or good possibility, to make some money. And of course, it's what we all want. Please keep in mind that what I say should not be thought of as financial advice in any way. It is strictly for educational purposes. Okay, please keep in mind that if you want YouTube to notify you when a new video is posted, because they are not posted regularly, please subscribe to this channel. Always a good idea in case if somehow it gets lost. YouTube will notify you of them. Okay, all you got to do is click on the button below that says subscribe to the channel. Straightforward. Okay, so please watch this video all the way through and you will see all 6 charts and why I think that they are either bullish or bearish. The first one that we were going to be discussing is the US dollar index. Okay, I did bring this to your attention in the past. Bringing it to you again. If we go back, most of these are all going to be 6-month charts. Okay, going back to the July lows, down just above 99, and it rallied all the way up to 107. Okay, so that was 8 full points, which brought you, assuming you were in at the bottom and out at the top, would have been about $8,000. Okay, now the margin for a US dollar contract is about $2,000. Okay, so put up 2,000, make 8 in profit. Not bad for a couple of months holding. Okay, that is really good. It's a lot better than what you're probably going to be making in stocks, and that's why you should be looking at futures. But from there, 107 went sideways for about a month, and it has since retraced. In fact, I put up a Fibonacci retracement from those lows, 99.22, all the way up to 107, and we can see down here at the bottom, right where it has maxed out, that is the 61 or 62% retracement. Okay, it's actually probably at about 60% retrace, but that is usually the maximum pullback before we get another move in the same original direction. Will it move in the same direction? Well, we've got a downtrend line here. It won't take much for it to break through that. There's also a 10-day moving average here that I have that has worked quite well. Okay, going back. Okay, just look at the direction of that. So when this changes and it moves higher, it will break the downtrend line. That will be a good sign to be getting in where the risk tends to be lower because it has broken through the downtrend line. Plus, we also have the RSI that has already broken its downtrend line. Now it hasn't broken above 50 yet on the but it is moving in that direction. So the US dollar looks like it may have bottomed out here. That remains to be seen whether it has. But if it has, then we've got a decent chance of it moving higher and another move upward. Okay, so that is for the dollar index. Next, we've got gold. And what I want to show, again, this is a 6-month chart. What I want to show you is this last pattern over the past 2 months. Bottomed out at 18, I believe it was 1810, if I'm not mistaken, give or take. Rallied all the way up to 2010. Okay, pulled back, and now we're in that next move upwards. Now, how high can this go? Well, what you would do is you would take this price here, the top here, that rally, that was about a $200 move, and add it to here. This is 1930, give or take. Okay, so add $200 to 1930, and you get 21.30. We're now at about 20.70, so we've got about $60 left if this pattern is correct and giving us the correct target price. Okay, everything looks to be going in that direction still. Again, just follow this 10-day moving average. It has worked very well. The trend, when the trend changes, goes down. When it turns back up, what happens to the price? Up. Okay, just follow that. But there's one little thing, that's this up here. That's the RSI. We're already at 79. Can it move an extra $60 and still, it will be even more overbought than it is today. Okay, possible, but again, keep in mind, the higher it goes, the riskier it is, and the less money there is to be made. Okay, so please keep that in mind. That is gold. And next is heating oil. Okay, this one seems to be pretty straightforward. Nice up move from the lows. Again, just pretty much following that moving average until it changed, went down here, and the candles turned red primarily. Since then, we've been going down in steps. Okay, I've got a little bit of a floor here. Once it broke, crashed, bounced back up, hit the floor, and came, broken again, and Friday broke that floor again. Where could it go to? Well, here's the next one, probably around 240, give or take. Okay, keep in mind that it has been pretty much below, the RSI has been pretty much below 50 for, just when it started to turn. So that has been quite accurate here at around 330. Okay, so it's been below 50. That is the bearish zone. So we are still in a bearish pattern. I know that most of the down trend has been made already, but we still have, it looks like we still have some more to go. Okay, that is again heating oil, and of course we want the weather to cooperate with us, which unfortunately we don't have any control over. Next is soybean meal futures. This one, again, pretty much straightforward here. Bounced off the floor here. Once it traded above the 10-day moving average, it was a buy. Also, RSI went above 50, so that was our buy zone. Okay, made some pretty good money. That was probably like 100 points to the top. Now, you would not have gotten out at the top, or at least unlikely that you would have. Of course, if you did, you probably would have had, 100 points, and there's $100 per point. That's $10,000 per contract in profit. Okay, again, unlikely that you would have sold out at the top. Nobody buys at the bottom and sells at the top, unfortunately. But again, looking at it now, we've got the moving average turning downwards. It is below the moving average. The RSI has broken below 50, and we are broken below this support level. Okay, so this looks like moving downwards from here. Okay, next we've got a very similar, what happened there? Oh, what happened? I missed, no. Okay, I thought that I had another chart. It's probably after this one. So this is rice futures. Okay, unfortunately it doesn't look like it's doing a whole lot, but what we have now, or just recently, let's look at November here. It crossed above the 10-day moving average. All you had to do is ride it, and it sort of stalled over the last week and a half. Okay, it's consolidated in a tight range, and now we got a red candle, and it did trade below the moving average. It did not close below that, so far we're safe. However, look at the volume. It has tapered off as it has gone higher and consolidated. Okay, that's a huge fall in volume. Not really what you want to see. Plus, we've got the RSI that is topped out and turning down. So this could be a change in direction. Is it that right now? No, but this is something that you might want to look at and put on that watch list of yours, okay, and just see what happens on Monday or Tuesday and just go from there. Okay, follow just put up the 10-day moving average and go from there. Okay, next, and this is what one that I was expecting. This is the soybean futures as opposed to the soybean meal, which we saw previously. Somewhat similar. It bounced off the lows of October, came up and made a high at 1400, and now I've got I drew a line where the previous high was straight across, and we've bounced off several times, and now we are pretty much there right now. Is below the 10-day moving average. We're pretty much at that support level, and same with the RSI. It is just below that support level. So this is looking more and more bearish by the day. Okay, so I would say wait until Monday for it to be like a confirmation and go with there on that one. Okay, so those are 6 commodity stocks that 6 commodities that you can be watching, and hopefully you can profit from. Okay, again, keep in mind that there is more risk involved, but there still can be lots of money that you can make. Certainly a lot more than in stocks. Okay, again, if you have not already done so, subscribe to the channel. A big thumbs up and any comments. I'd love to hear what you've got to say. And having said that, I will see you in the next video. Take care. Bye-bye.